Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. It's a new year, and there's a lot to look forward to, but we've got headwinds and tailwinds. So today we'll talk about bracing yourself for both the challenges and the opportunities in 2024, and what the new year has in store for investors, especially in apartments. Today on the Real Estate Guys radio program. All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me in the co-host seat, it's our financial strategist, Russell Gray.
Hey, Robert.
We are just back from Create Your Future, our annual goals retreat, and boy, what an amazing showing we had, and so many awesome folks there.
Yeah, it's always great. The beginning of the year is a great time to think about where you've been, where you are, and where you want to go. It's about mission, vision, values, and then you grow out of that your strategy, strategic plan, tactical plan. Then it's a grind. And if you don't have those goals clear in your mind and you don't know who you are, sometimes it lets the wind out of your sails, right? Because in the process of addressing or prosecuting our mission and working towards our goals, we're going to run into adversity. When you run into adversity, your resolve is tested. And if you aren't committed to what you're doing, if you don't believe in what you're doing, if the why isn't big enough, the how doesn't matter because you're not going to do it. And so I think as we're sitting here at the beginning of 2024, looking at the landscape of what's going on in the economy and interest rates, and of course a volatile election year, we really don't know how it's going to turn out. It's going to be a wild ride. And I think now's the time to set forth into the new year with clear vision, mission, values, and resolve to navigate it no matter what comes.
Our guest today spends a lot of time looking forward. Every beginning of the year, he does a forecast, specifically when it comes to apartments. And so we're going to talk today about the apartment market and what's happening and the changes that are being made. And, you know, just like we've been talking about, interest rates have been such a big topic. Where's that going in the future? Insurance. Boy, costs are up for insurance. You have the property management issues that you can always have. So I think as a real estate investor, once you get you figured out, that's the goal setting part. Now you got to figure out, well, what does the market look like and what's changing?
Yeah. And it's no secret that we have come through a very aggressive interest rate hiking cycle that's been very disruptive to credit markets, balance sheets throughout the financial system. Whether you understand all that stuff or not doesn't matter. You see the effect of it. The Fed allegedly pivoting, maybe talking about softening, even though inflation hasn't come down to their 2% target. And so that's concerning for a lot of people. Then you've got folks that have financing structures that really weren't designed for this type of an environment. So there's some fallout in the marketplace, and people are moving to escape taxation and regulatory environments. It's an opportunity now after COVID and the pandemic lockdowns. People have learned maybe they don't need to live where they work anymore. So it's really, in a lot of ways, uncharted territory. And it's all the more reason why it's important to spend time with people that have been around through different market cycles, that are very experienced and also very connected to other people that are looking at the same set of circumstances through a different viewpoint, and putting all that together and trying to understand which way the wind is blowing and how to catch some of that wind in your sail.
You know, it's interesting. This time of year, I start looking at all of the folks that we pay attention to who make these kind of predictions in building and development and housing and all the areas, as I know our guest does. And, you know, there's a lot of, I would say, disagreement about what might happen and whether it's going to be rosy or not. Is it a hard landing? Is it a soft landing? Is it no landing? But I don't think there's any disagreement about one point. and that is, as a nation, we're underbuilt on housing units. And whether you believe the pessimists who say we're 1.5 million units underbuilt, or the optimists that say we're 7 million units underbuilt, they do kind of agree that we need more housing. Providing clean, safe, affordable housing is exactly what real estate investors get a chance to do. If you are investing in single-family homes, that's how most folks start. But if you have any idea of getting into bigger properties, well, today is going to be a great show for you. Our guest didn't buy a single-family home to start with. Instead, his very first investment property was a 32-unit apartment building. He's only grown from there. When we come back, you'll meet the apartment king, our friend Brad Sumrok, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hi, this is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program, and Happy New Year. We're glad you're listening to the Real Estate Guys this year. We're going to bring in lots of great stuff, and that includes today's show. Excited to have back with us our good friend, the apartment king, Brad Sumrok. Hey, Brad.
Hey, I'm glad to be here. Happy New Year.
Yes, Happy New Year to you. It is going to be a Happy New Year. I know you are a busy boy this time of year because every end of January, 1st of February, you spend a lot of time putting together a lot of details so you can make your annual apartment forecast. So before we talk about that, because I want you to share some of the points of what you see coming down the road, let's just talk about 2023. It was an interesting year. I know in your business you had highs, you had lows, you had good, you had bad. What are some of the takeaways and maybe lessons learned from last year?
Well, 2023 was a really interesting year. I'm not sure the interesting would be the best word that I would choose, but it was let's just say it was a challenging year.
Yeah.
And there's also a lot of opportunity because when there's challenges, there's opportunity. So let me just start with the opportunity, and then I'll cover some of the challenges.
Yeah.
Well, the opportunity is that the prices of real estate are down arguably, and depending on the market and the asset class, 15 to 30% down.
Right.
So we bought 2 deals in the fourth quarter of 2023, and those were the only 2 transactions that I did the entire calendar year.
Okay.
But the opportunity that presented itself was so good, and these were opportunities that were on the market 8 to 12 months ago that were at a much higher price point. And so knowing the market, knowing market cycles, knowing the inherent values, knowing the business models, and where we could take the property, these were really, really good deals. And so that's why I'm optimistic about 2024. But when we look at some of the challenges, we have to look in that rear view mirror. Yeah. In the rear view mirror, the challenge with people that just got into the business, I mean, imagine you invested in the stock market, which I don't do, by the way, but imagine you invested in the stock market and you didn't know it at the time, but it was kind of at the top of the market. And then since then, the value of your portfolio went down 20 or 30%.
Right.
So there's a lot of new people that got in that are like, hey, I thought you said this was a great way to build wealth.
Right.
But it really is, because I've been doing it for 22 years. But we've also went through the 2008 great financial crisis and had a market cycle and a market correction there. And there were some people that did better than others during that crisis. And the same thing that happened in 2023. I mean, leading up to 2023, and you guys talk about it, way more than I do, with the unprecedented rise of interest rates, inflation, costs, supply chain shortages, labor. So there were a lot of pressures in not only the apartment market, but in just about every aspect of commercial real estate. Insurance going up, taxes going up. Previous years, we had unprecedented rent increases, so we had unprecedented rises in property values. And then the next year or two after that, all the property taxes start catching up, and now we're paying higher property taxes. We're paying higher insurance. We've had more hurricanes and windstorms, especially in Texas and Florida, which are two of the primary Sun Belt markets. So there's been a lot of pressures, not to mention variable rate loans, people that made decisions to not get rate cap insurance that are finding themselves in a bind. So, 2023, when I say it was an interesting year, I did 7 or 8 deals in 2022, 7 or 8 in 2021. And most of those deals are doing really well on the income side, meaning we're at or above our projected rent. So we just had an investor call today. We're actually 6% above our year 2 rents.
Yeah.
But our expenses are higher.
Right.
Our insurance is higher. We would budget $1,600 for an appliance package. It's now costing us $2,800. So these are just some of the nuances that we had to deal with. And then, of course, getting on the phone with lenders and, hey, why didn't you upgrade the number of units you said you were going to do? Well, we had this much money, and instead of spending $1,600 for appliances, we're spending $2,800. And so that's just one example of some of the nuances that we've faced. What you hear in the narrative is, a bunch of inexperienced syndicators, bought deals with no experience. And yeah, maybe there's some of that, but a lot of very experienced investors and institutions bought a lot of deals that are having similar challenges.
Right.
So if you look at it from that perspective, and the good news is there's light at the end of the tunnel. And for people that just got in the business, I would just say, it would be like saying, hey, I went to college, and I went to college. I don't know if it's the best investment somebody could make, but I went to college way back then. And imagine you get out of college and you're in a cycle where unemployment is really high, and it takes you a while to get a job.
Yeah.
Well, eventually you're going to get a job and you're going to have a successful career. But sometimes there are market cycles that happen according to the experts, Ray Dalio and some of the other folks that we all listen to and know about. There are regularly occurring market cycles, and we're in one now.
Yeah.
And we see light at the end of the tunnel.
Well, this is such a good point, and I love the fact that you share your numbers, 7 deals, 2 deals. This is the nature of real estate. Sometimes it isn't time to put your foot on the gas. You're always looking, you're always ready for a good deal, but the market doesn't always give it to us. And so you got to be okay with not just being a deal junkie, but at the same time, you can't let that color you when you do see a deal. So the fact that you saw things change, prices come down, opportunity arise, and jump in. I know you probably had goals for more than 2 deals in the year, but it was the right number. Now, the other thing I want to talk about, Brad, is when it comes to apartments, It's the epicenter in many ways of the issues with, you mentioned rate caps. That's an insurance that you put in place to make sure that if the loan rate goes up on a variable loan, that you're at least somewhat covered. But the other thing people may not understand who invest in single family homes is that if I buy a single family home, right now I'm not thinking about refinancing because I might be paying 4% and the new rate is 6.5 or 7. So I'm not going to refinance. But if the rate came down, I could. Sometimes, most of the time in multifamily, it's not necessarily driven by rate when you refi. You get a loan for a particular amount of time. And so one of the time bombs that happens is you've got a 5 or 10 year loan and it comes due and you got to refinance it no matter what.
That's right. So your debt that you select on the acquisition has and it should be, and it is, it's a big piece of your business plan. Yeah. So, for example, you could buy a deal with a 10-year fixed rate loan. You could buy a deal with a 7-year fixed rate loan. We've bought deals in 2021 with a 3-year variable rate loan.
Yeah.
Well, now we're in year 3, and some of these loans are coming due in August, September 2024. And, most of these deals that I'm involved with, we'll be able to get extensions.
Yeah. Because
we're hitting our debt yield. And debt yield is like, what is your income versus the debt? And if you can show the lender that you are meeting that debt yield, then they'll be able to give you an extension. We're actually in the process of doing a cash neutral refi. Okay. The plan was to do a cash out refi. Right. There are people out there that I'm hearing that are doing cash in refis.
There sure are.
So like doing a cash neutral refi in this environment isn't a bad thing. And especially if it's cash flowing and you pay off one loan and you get another loan of a similar amount. So, there's a lot of things that are in play right now. And look, this is why it's so important to work with experienced people that are, we call them general partners or lead syndicators. I just got off of a call. We did a 5-property, 1,100 unit portfolio that we bought at the end of 2022. And so we're in the process of discussing a loan modification with a lender. Now, because it's a $160 million loan on a $200 million acquisition, and my partner is fluent in, he came from Wall Street, he's fluent in capital markets, he's leading these discussions. I'm very confident that we'll be able to do that. Plus, we have an extremely experienced asset management team, an experienced property management team. So the key to getting through, I heard Russ in the beginning talk about adversity. One of the keys to getting through adversity is, of course, having a powerful why, but the other one is having a powerful team around you, because if you're trying to do all this stuff on your own, it becomes challenging because we all have different skill sets. I just had a tax planning call with Tom Wheelwright. I know you didn't even ask this, but I don't know if you heard this yet, but this is huge news. Do you know that the House of Representatives, the Democrats and the Republicans, just signed a bill? It's not passed yet, but they're going to reverse the bonus depreciation back to 100%. And it just came out yesterday. If you Google it, you'll see it out there. And they're going to take away that ERTC tax credit during COVID to pay for it. And we're going to have potentially 100% bonus depreciation retroactive to 2023 and for 2024. Whereas 2023 was 80% and 2024 was 60%.
Right.
So, and this has already been passed by the House. So there's a lot happening right now. And then the other thing you mentioned is in the election year, we don't know what's going to happen, but I would say expect the unexpected, and I would expect some good things coming out of it.
Well, let's talk about that. Let's transition a little bit, because I know at the beginning of each year you do your forecast. And the good news, if you're listening to the show in the week it was published, then you haven't missed it yet. But if you have, it's okay. We'll, before we're done, tell you, hey, go find this great content. But every year you do this, and every year we point people to it. Tell us what you're watching now. I'm going to guess with still a couple weeks to go, you probably don't have the whole thing figured out. But what are some of the themes for your apartment forecast 2024?
Well, it's interesting because here's what I do for the forecast. I study, 8 to 12 other forecasts. Mm-hmm. Commercial real estate, multifamily, from lots of different shops. Yep. CoStar, Marcus and Millichap, NMHC, just to name a few. So I study those. And then what I do is I look for commonalities and trends. Yeah. And so my forecast is not like, oh, this is the Brad Sumrok forecast based on which I do have 22 years of industry knowledge.
Right.
But I'm not going in just drilling into the data myself, and I do some of that. But what I do is I study some of the best companies that specialize in market data, and then I look for, okay, well, where do I see these commonalities, and where do I see, hey, I got like 8 out of 10 companies that are all saying some of the same things. Yeah. And then there's an outlier over here, there's an outlier over here. And so that's what my forecast is. And I've already been, I just watched one today for an hour and a half. So and I'll watch one tomorrow for an hour, and then there's 2 tomorrow that I'm watching, one at like 10 a.m. and one at 6 p.m. So the bottom line is people that watch my forecast are leveraging probably 20 hours of me being a student studying other people's forecasts so they don't have to put in that time and energy.
I'm glad you make that distinction, because while you certainly have earned the right to have an opinion, it takes many voices, lots of counsel, especially when none of us really know. Nobody who tells you that, oh, this is exactly what's going to happen is telling the truth. They don't know. They make good guess sometimes. And, if I look back at last year's forecast, you had some excellent points you made, but we don't know. We just never know. So I think the idea of listening to something like this is so you can get a little bit of an edge, right? To be that be prepared you talked about, expecting there to be the unexpected, and that can happen. But at the same time, if we're too confused, then we get paralysis of analysis. We don't do anything. And I know you're a guy that's prone to action, and I know it must have taken some wherewithal to only do 2 deals this year. But talk about that part, the fact that there is action you can take no matter what the market does.
Well, you always got to be ready. Like one of the things that I did is I focused on, how do I talk better to my investors? How do we communicate the not so great news? Hey, we're pausing distributions, for example. How do I build an investor database? So there's activities like, look, as a syndicator, which is something that you guys are really big on, as a syndicator, we need to be doing multiple things. And sometimes we'll have teams that we'll collaborate with on deals or even form companies and partnerships. So, syndicators, they need to be able to, say, find deals. That's an effort to go out and source deals with brokers and owners and networking and get access to deal flow.
Yep.
And then you got to underwrite the deals, right? And that's a skill set. And then once you underwrite them, you got to fund them. And there's funding, there's the debt side, so you need liquidity and net worth, and then you need equity, so there's capital raising, and these are all different skills. So if someone's like, well, there's no deals, well, what do I do? It's like, well, there's a lot to do. Yeah. You could work on your branding, you could work on your messaging, you could work on, your marketing if you already have deals. Oh, and once you close a deal, you got to operate it.
Right.
And so that's a critical skill set right now is operations and KPIs and dashboards and managing management companies and keeping staff and training staff and managing costs and keeping your eye on the ball. And then of course there's, refinancing or loan modifications and discussions that 3 years ago people may not have even been aware that they needed to have these discussions. And so there's a lot at play. And so there's a big financial reward for being a syndicator or a GP in terms of carried interest and promotes and different sorts of compensation. But there's also responsibility with that. So, at a conference I'm going to right after this, they want me to speak about passive investing. Like, why be a passive investor? And it's really simple. It's because it's passive. Yeah. Because you don't have to do that stuff. You don't have to find the deals and analyze the deals and take accountability when there's issues and nuances or market cycles. And you're limited to the amount that you put in, and you may not, you're probably not on the loan. And so there's some beauty in being a passive investor, and I think some people forget that. But, for me, I still passively invest, but my thing is being on the GP team and adding the value that I can. And so, yeah, it was a little frustrating in 2023, only doing 2 deals. But at the time, it's like if I could step back now in hindsight, I could say, yeah, I probably wouldn't maybe I wouldn't have even looked at anything for the first 6 months if I had known. But like, you don't know when you're in the thick of it. Like, you don't always know when you're in the thick of it. And people say that they know, they don't know.
Hindsight is 20/20. You get there, you can't feel it. It's easy to go back on the chart and go, oh yeah, I remember that happening.
Right.
It's another thing to look ahead when there is no chart
Yeah.
and try to figure it out. Our guest is Brad Sumrok, the apartment king. We're going to talk about his upcoming apartment forecast for 2024 and how you can get that. And we've got some other things to look forward to. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program, and thanks so much for tuning into the show now in our 28th year of broadcast. Hey, coming up in June, it is the 22nd annual Investor Summit at Sea. We're going to spend a couple of days in a hotel, then jump on an absolutely beautiful cruise ship and hang out with our friends like Ken McElroy, George Gammon, Peter Schiff, Brian London, Dana Samuelson, Tommy Hopkins, and more. You should be there. Great conversations, tons of education, and a really great time. To reserve your cabin, all you have to do is send an email to summit@realestateguysradio.com, summit@realestateguysradio.com. We're talking about what the new year has in store for apartment investors and really all real estate investors with Brad Sumrok. Before we get back to that interview, it's time to play Real Estate Trivia, which is your chance to win a prize by knowing today's real estate trivia question. In just a minute, I'll give you the question, and if you think you know the answer, just send your best guess to trivia@realestateguysradio.com, trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because if you're the winner, we're going to send you a vintage copy of Tax-Free Wealth by Tom Wheelwright, who Brad was talking about earlier. That can be yours if you know today's real estate trivia question. Last week on the program, we had Ryan Gibson talking about self-storage, and we asked this: which U.S. city has the most demand for self-storage? Well, it's Houston, Texas. According to the folks at Square Foot, Houston is the most in-demand city for self-storage units by reservation volume as of the end of 2022, followed by Las Vegas, Nevada, and Phoenix, Arizona. The top 3 places that boxes call home. Here's our real estate trivia question for this week. Which country has the lowest average elevation? There are places on this beautiful planet that are high, that are low, that are in between. Well, which country, on average, has the lowest elevation? If you think you know, or maybe you live there, send your best guess to trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your physical mailing address. First person that gets that right gets an awesome book by CPA Tom Wheelwright, Tax-Free Wealth. That's today's real estate trivia question. We're talking about the future. What does it hold for 2024, especially when it comes to multifamily? Maybe you are thinking about this is the year I'm going to get into the apartment business. And as Brad, you talked about beforehand, you can invest passively with somebody else. That's a great way to get started, get some exposure to multifamily and not having to know everything about it. But then maybe you do want to actively invest. And we have Brad Sumrok with us. Brad, there are folks who, like you, are thinking about the bigger units. You guys do, 200, 300, 700, 1,100 unit portfolios. But when you started out, right, your first apartment building was 32 units, then you bought a 30 unit. People, maybe that's a jump they make too. So I know you talk about the three ways you can invest. You can invest in your own account, just you buy an apartment building. You can invest with somebody else passively, like you've discussed, and then you can become the general partner or syndicator. As you're looking ahead and you're starting to pay attention to some of these metrics, getting ready for your forecast, what else are you watching?
Well, I think, one of the themes that I have for 2024 is getting back to basics. And what do I mean by that? Well, what I mean is, like just say in the syndication model, I've always taught there's more synergies and economies of scale in terms of management, debt, lots of things, staffing, that makes 100 units easier to oversee and acquire than, say, a 10 unit.
Yeah.
Let's just pick a number, and let's say 100,000 a unit is a price point. Now that might be off in some markets, it might be inexpensive in some markets, it might be over expensive in some markets.
Yep.
But 100,000 a unit times 10 units, that's $1 million. The debt that's available today, you'd need roughly 40% down. So to buy 10 units, you need $400K.
Right.
And there's a lot of people I know with $400K, but there's a lot more people I know that don't have $400K.
Yes.
So then they're like, well, what do I do? Brad, should I start with a fourplex or a single family or wholesale or subject to? And look, there's 1,001 ways to make money in real estate. And I just happened to find that multifamily is a way that really aligned with me and my goals 20 years ago when I got started. But take that same 100-unit deal at 100,000 a unit.
Yeah.
That's 10 million.
Right.
And with the same 40%, you need 4 million. So it's like, oh my God, well, if I don't have 400,000, well, how am I going to get 4 million?
Right.
But this is why we synergize so much in our two organizations, because if you find a way to communicate, to offer value to potential investors, to build your brand, and to be a syndicator, and you're able to raise money, it's actually easier. And I can tell you this from my experience, because I did 32 units with my own money, 30 units with my own money, and then my third deal was 250 units with other people's money.
Yep.
And I can tell you without a doubt that the 250 units was easier. But I was part of an investor club, an investor community. I went to networking events. I went to educational events like the ones that you do and the ones that I do. And I became committed to being known and being, talking about what it is that I do.
Yep.
And so people would ask me, hey, Brad, the next time you find a deal, I'd like to invest with you. And so when the broker brought me that 250 unit and I was out of my own money, I was able to raise $2 million from 27 people and buy a 250 unit deal. And it was easier. So I'm still to this day a big believer that even if you're new, as long as you're educated and you surround yourself with a strong team of advisors and providers, that you could be successful buying 60, 80, 100 unit deal, okay? Now that being said, getting into a 30 or 40 unit deal could be a good strategy. And I'm seeing right now, look, and this is typical for the beginning of every year. there's a big conference at the end of January that the NMHC puts on called the National Multifamily Housing Council. And that conference is January 30th and 31st in San Diego. And I normally go every year, but I can't go this year. But that's when the brokers release their listings. Starting in the first week of February, I'm going to see lots of new listings coming out.
Right.
And we're going to see lots of new listings coming out. Right now, things are still kind of quiet like they were over the holidays. Like it's middle of January and I'm calling brokers and they're all telling me the same thing. Hey, we got some deals that we're showcasing, but we're going to be launching all of our new offerings at the NMHC conference.
Yeah.
And after the NMHC conference. And it's been that way for, since I've been in the business. So we're going to see a lot of new listings coming out. We're starting to see the gap between what sellers think their properties are worth based on 12 to 24 months ago versus what they're actually worth based on the debt that's available today. And we're starting to see that gap narrow a little bit. And the reason is that when interest rates went up so fast and lenders weren't loaning as much money, and when they were, it was a much higher cost to borrow, it just became the deals didn't pencil out. That's why I only did 2 deals in 2023. Right? So now we're starting to see the sellers that really need to sell, they have come more in line with reality. And I could give you an example. I sold a deal. I sold 2 deals in 2023, and I tried to sell 3. The third deal, I put a contract to sell it at $16 million in April of 2023, and the buyer had it tied up for 8 months, and they couldn't close. Between that 8-month period, the value of my property went down from $16 million to $13.5 million.
Wow.
And now I have people that are saying, hey, Brad, I'll take it from you for $13 million. So imagine, and here's the thing, I'm in a fixed rate loan until 2027. I don't need to sell.
Yeah.
So what I'm going to do is I'm going to keep the property and I'm going to get through this cycle and I'm going to sell it in 2 years for over $15 million. And I have confidence that I'm going to do that because it's a market cycle.
Yeah.
If I needed to sell right now because my loan were due, or I had lots of problems at the property, or I was self-managing, or I was, distressed and had no liquidity, I'd be selling a property that was worth $16 million last year for $13 million right now. And so for the people that want to buy, that's the buying opportunity.
I think folks have to recognize it as a cyclical business, and all the cycles are not necessarily aligned. We had, coming out of COVID, extremely high costs of things like lumber and pipes and just all those costs. And then getting the stuff, the logistical supply chain. Well, that's eased up a little bit, but inflation has been a part of where we see costs go. You mentioned insurance. We talked about that early in the show. That's a real ouch to people. Insurance has gone up for a variety of reasons, and some of it we covered on an Ask the Guy show a while back, have to do with the insurance companies keeping their reserves in bonds and the whole mark-to-market thing, and some of it has to do with the fact there's just more claims, more storms, more issues. So this is the moving landscape we have to pay attention to. And I will say that there's a great number of people who own single-family homes who think, gosh, I'd like to see myself get into bigger stuff because I get economies of scale and efficiencies and all that, but it's so daunting. And one of the things I appreciate about you is that you are a great teacher. You take the things that you've learned through not head knowledge, although there's some of that, right, because you're always studying, but seat knowledge. You've been there, you've done it, you've been through cycles. 22 years in the business, you've seen highs, lows, you've seen interest rates all over the place, you've seen black swan events. And last time we were together at our syndication event, you were doing a new kind of a class. It's smaller format, very hands-on, just you teaching for 2 days, called Weekend to Wealth. Heard great things about that, and I understand you're doing that again coming up around the corner. Tell us about that class, because it's really different than maybe some of the things people have heard you do in the past.
Yeah, and we love to do 2 big conferences a year with celebrity speakers and high energy, and the Weekend to Wealth event is something different. It's more of a workshop. We limit the number of people. It's in person only. There's no virtual experience, and I'm the only speaker. There's no celebrity speakers. In fact, we actually intentionally, we don't have a DJ, And there are events that we do, high energy events like that. It's a great way to learn, especially if it's a 3-day event. Imagine just be sitting there at a desk taking notes for 3 days. It's hard. So that's why we like to do these high energy events. And they're fun and they're fulfilling and lots of content. But Weekend to Wealth is not that event. It's a 2-day event, and I call it more of a workshop. And so we spend about a day going through the framework, the same framework that I use to find deals and analyze deals and manage deals and profit from deals and numbers and examples. And then half of the second day is all underwriting. So like the attendees will bring their MacBooks or their PCs and download our proprietary property analyzer, and we will actually analyze properties. And so we call it Weekend to Wealth, but really what it is, it's how to buy, analyze, manage, and profit from apartment building workshop. But that's too long to put in the subject line, so we call it Weekend to Wealth.
All right. Well, before we're done, we'll tell you how you can get plugged in to Brad's absolutely free market forecast. And also, if you're interested in Weekend to Wealth, you'll be able to get the details on that. Be in front of Brad as he teaches this stuff. He's taken 22 years to figure out. Hey, Brad, you've got this forecast coming up. You've still got some pieces put together. Anything else you want to share with us that's a trend that maybe the listeners want to think about?
Yeah, well, what some of the things I'm going to talk about, and there's certain economic drivers that we need to pay attention to. So I'm going to be talking about things like employment, and employment matters, and what markets have the best employment right now and which don't. So that's going to help. Market selection is key when you want to buy an apartment building. You could have the best team, you could buy it at a great price and have great management, but if you buy in the wrong location, you're going to have a challenge.
Yep.
And on the other side of the coin, you could have a good team, but maybe not the best team.
Yeah.
But if you have a good team and you buy in a great market, you could still do really well.
Yeah.
So the market that you select matters. And so we're going to be looking at markets. We're going to be looking at employment. We're going to be looking at the pace of employment. We're going to be looking at layoffs, like where jobs are being created, where jobs are going away. We're going to be looking at unemployment. We're going to be looking at those trends, population growth, rent growths. We're going to look at affordability between single family. Buying a single-family home, as you know, is probably at an all-time unaffordability right now.
Yep.
And I'm looking at a chart right here that shows that. It was on a forecast that I saw today. Like single-family homes and affordability right now are the lowest since 1980 in the United States. So that lends itself to more people renting. But not all markets are created equally. There are some markets where a median-priced single-family home might be just as affordable as a medium-priced apartment.
Okay.
And so if you're in that market and you say, hey, Brad, why are you paying $100,000 a door for that property in Dallas, and I'm paying $42,000 a door for this property in, just say, Kentucky, which I just picked randomly. I'm not saying Kentucky is a bad market, but some small market in Kentucky. Well, what if your PITI payment for that single-family home is less than what it costs to rent an apartment?
Yeah.
Maybe you're overpaying at $40,000 a unit. So you got to understand these nuances, and I talk about that. So we're going to be looking at construction trends. We're going to be looking at property classes. Like you may have heard, Dallas leads the nation in new construction. Yeah, but that's based on the number of units coming online. But if you look at the percentage that represents, it's like 2% is new units coming online, because there's so many rental units in Dallas. And so I'm looking at a chart here, Dallas is number 2 in the nation in new deliveries. Yeah, but as a percentage of inventory, it's not even in the top 20.
Wow.
That matters.
Yeah.
Where Austin has only 1/3 of the new deliveries as Dallas, but Austin is a much smaller market. So the new deliveries in Austin represent 6% of the inventory. So Austin actually has a lot more supply challenges than Dallas. But if you just look at the number of units coming online, the data doesn't show that.
Well, markets are so important. I know this is one of your top areas. In fact, in years past, you've typically given us a top 10 market list. You can plan to do that, something like that this year?
I will absolutely be doing that. I take all the information plus my 22 years of my own experiences, and each and every year I come up with Brad's top 10 markets for 2024, and that will be revealed on January 31st when I do my forecast.
All right. Well, that's the forecast, January 31st. To get all the details, get signed up for it, and learn about Weekend of Wealth, we'll tell you how to do that when we come back. Brad, this has been good stuff, and looking forward to hearing the forecast.
Awesome. I'm excited to do it.
There's the Apartment King, Brad Sumrok. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, I'm G. Edward Griffin, author of The Creature from Jekyll Island, a second look at the Federal Reserve. And you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you ever wanted to do bigger deals using other people's money or passively invest in things like awesome apartment complexes, come on out to the Secrets of Successful Syndication. The next one happens at the end of March 2024 in Dallas, Texas. Lots of great speakers will be there, including the Apartment King, Brad Sumrok. Well, as always, I always learn something when I get around Brad, and I like to get around Brad when he's got all these facts and figures on his mind for the coming year.
Well, we get a chance to hang around with another great apartment investor, Ken McElroy, and one of the things that Brad and Ken both have in common is they're students. When you hear someone give their opinion and they talk about what they think is going to happen or why they believe what they believe, often that is applying their wisdom, their context, their real world experience to a lot of other perspectives they glean from smart people who are doing the same thing. And I heard Brad talk about that, and I just think that that is so important. I've always said the most successful people I know are humble, and a big part of humility is realizing you can't figure it out all on your own. You don't know it all, and your perspective is good, but it's not the entire picture. And so when you get a chance to hang around with other people, go to conferences, read other people's papers, listen to other people's forecasts, and then filter that through and have someone give you the Reader's Digest of that, that can be really, really valuable. And of course, we've been watching Brad do this for years, and it's very, very good, especially because he tends to be optimistic. And I don't think Pollyanna is the right word. Obviously, 2 deals in all of 2023. He wasn't seeing what he wanted to see. He was seeing what was there, and then had to do a deal when the deal made sense, and he had to work a lot harder probably just to get those 2 deals. And I get that. So that's just the voice of experience. That's somebody who's been through the different market cycles. And I think what we're going to see in 2024 is people who haven't been through that cycle, well, they're going to be paying their dues. And part of their dues is going to be like what happened to me back in 2008, and I don't live in that misery, but I never, ever forget what happened when I wasn't wise enough to listen to the people who'd been through the previous market cycle. I didn't listen to them, thought I was smarter. That was a huge mistake. So appreciate Brad's humility, his attitude towards being a student, and the way he focuses on team as much as he does on just being the guy, and he's both.
If you'd like to be invited to Brad's forecast for the new year, especially when it comes to multifamily, you'll want to watch it no matter what kind of real estate you're investing in, because there's some key metrics there. But if you'd like to do that, all you have to do is send an email to forecast@realestateguysradio.com, forecast@realestateguysradio.com. When you do, you'll get the information to register for Brad's amazing forecast for 2024, plus the details on Weekend to Wealth. If you think maybe this is the year you get educated as an apartment investor, you'll get those details too. You know, it is important to get around and learn and study, and Brad models that for us in that he's paying attention to these online webinars. He's going to live events. He's left here to go to one of those events. He teaches, and he teaches regularly, but it is the live events where you really can meet other folks that are doing it. One of the things I love about going to Brad's event is there's just so many people there that are evidence of success. His students who have done it through good times, through bad, that's a big part of it. So this is a year when there's a lot of awesome things coming up, and you can check out our website at realestateguysradio.com under events, where you'll see our events, you'll see Brad's events, you'll see a lot of the other events we're speaking at, and get out there, meet people. It's a great, great time at the beginning of the year. So start putting your plan together. And sometimes your plan includes building up your team and building up folks that can help you.
Yes, I think that whole idea of team, Brad brought it up several times. And again, getting a chance to hang around with people that have built big businesses, big portfolios, that have survived difficult times, that have been able to adjust. A lot of it is on the strength of the team. And the team isn't just the people that work for you. It's also the people that are advising you. Brad talked about that, your technical advisors, your lawyer, your accountant. He brought up Tom Wheelwright and the great tax tip. I mean, that relationship has been literally worth millions of dollars to Brad. And then you have your mentors, the people who are helping you get unstuck when you get stuck. A lot of people don't even understand the difference between mentoring and education, but mentoring to me is when you're out there trying to actually do something in the real world and you run up against an obstacle and you need help. And the old adage that the teacher appears when the student is ready is really true. That's when you learn best, is on a need-to-know basis. And that's when you need to have people in your circle on speed dial that you can pick up the phone and call and say, hey, I just ran into this real world problem and you have real world experience. Can you help me get unstuck so I can get going again? So you have to have all of those things. If people are listening to this in the beginning of the year when we're recording it, I think that it's a great time to be looking at your current inventory of advisors, the people that are allowed to speak into your life, the people that have expertise and experience, and your mentors, and ask yourself, who's missing and how can I build out a bigger, better team to carry me forward into 2024 and beyond? Because I think based on everything I've heard about the changes and how things are evolving, it's going to be a little bit of a chaotic year. And that doesn't mean bad if you're prepared. It'll be bad if you're unprepared. But it's going to be a time where you're really going to need those other people in your life, that strong team, and that those perspectives that come with the mentors and the advisors that have been there, done that.
You always have to pay attention. Our guess is this year will be one of those years you're going to really have to pay close attention. Big thanks to Brad Sumrok for sharing his time with us today. If you'd like to get in on his 2024 apartment forecast, just send an email to forecast@realestateguysradio.com. There are still cabins available on the 22nd Annual Investors Summit at Sea, but they're going fast. Get to the website at realestateguysradio.com and look at the top where you'll see Summit to learn more. We've got an awesome show for you next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.